Hey everyone, welcome back to the Mark Loeffler Experience. We got Pierre-Paul Turgeon from MultiFamily Investing in Canada. We're going to be talking about apartments as an asset class. We're going to be talking about basics of buying an apartment building and how to start going about it. Pierre-Paul's a wealth of knowledge. He owns a bunch of apartment buildings. He used to work for CMHC, so he was the man at one point that we all tried to get money from. Anyways, welcome, Pierre-Paul. Thanks for being on. And I wanted to have Pierre-Paul on because Pierre-Paul is like the godfather of in multifamily investing in Canada. He teaches courses. He has a Facebook group. I wanted to have him on for two reasons. We're going to talk about the basics of multifamily investing, what you need really to get started. And number two, we're going to talk about how apartment buildings have fared throughout COVID. Does that sound good? Is that something that you think we can handle?
Absolutely, Mark. But just don't forget, not only do I teach this, I own apartment buildings. I own 6 of them. So 136 units, I think, is what I own. So, yeah.
Right. And at some point, he'll just give up and sell those all to me. So it's okay.
Not interested. I'm a long-term holder.
If somebody's watching this channel and they want to buy multifamily apartment buildings, in your opinion, what are their steps?
You got to do your homework, Mark. Not because I teach this stuff, but as you well know, you need to do your homework in advance. Like guys like you, realtors that sell multifamily properties, and realtors are always your first point of contact. They expect you to have done your homework. How much money have you got? Where's the money coming from? Ideally, because of anti-money laundering issues, you should have that money in a bank account 3 months. So that the paper trail where the money came from is well established, because the bankers are going to ask you that.
Canada too, not
in Canada too. That's a very good point you're making. I get that question asked a lot, even when it comes to one's assets. When you prepare your personal net worth statement. So if you have assets outside of the country, they won't be taken into account into your personal net worth, because the banks are not going to go into a foreign country to try to collect on you if you default on your mortgages. So first of all, like the emphasis, Mark, and you've attended my workshops, I put a ton of emphasis on planning and research. My course actually has first two modules, which are some of the largest modules in the course, on researching and planning your move. So doing your homework, where's the money going to come from? Why are you investing in apartment buildings to begin with? Because we both know, except you're a bit of an exception. You invested in the gold mine of Hamilton, and you got a good ROI very quickly. But generally speaking, it's long and steady wealth creation. It's not overnight, unless, like I said, you have the market to pick you up. But so you got to understand these things. Why? What kind of form or ROI you want? Is it cash flow? Is it long-term? Is it protecting your capital? So you got to be very clear with your goals, Mark, is what I would say. Homework to begin with is what you need to do. You also need to know, yeah, go ahead.
I'm just going to say with the goals, like if you don't know, if you're searching for cash flow, then maybe you're never going to look in Ontario. Well, I was talking to somebody yesterday, and I'm like, if your time frame is anything less than 5 years, you're not going to get cash flow. But if your time frame is 5 to 15 years, you'll get cash flow at that time. But at the beginning, you're not getting cash flow.
Mark, it's a very, very, very important point. And you know me, I tell it the way it is, and no difference with my students. It's not for the cash. It's the lowest profit centers for principal pay down, and as we know, interest rates continue to be extremely low, and it's capital appreciation. So cash flow, Mark, between you and I, you can always make a property cash flow, just put more money down, but that's going to have a significant impact on your cash on cash return on investment. But if this is your thing, this is what you want. But I'm not sure when the cost of money is so low like it is now, it's the best thing to put a larger down payment than what you need to. But it's a decision you need to make. So
with interest rates being lower than inflation, my opinion is take as much money as they're going to give you.
I agree. That has always been my take. Although now that you're a neighbor of mine in Edmonton, you've got properties in Edmonton. It depends on the stability of the market. I'm finding that I would structure my deals differently, knowing what I know now, with the volatility of the oil and gas market, Mark. Anyway, that's a different conversation, but it's a very interesting one. But this being said, you need to know what's out there too. So we're talking about cost of money. You need to know what are these interest rates for, depending on the size of the loan that you're going to go for. Because at some point you got to crunch some numbers, and I want to reassure people, Mark. Yes, you got to do your homework, but the numbers are not complicated. right? It is anybody
Well,
with
and
basic
any
math.
you can go back. I've ran numbers on this thing for 30 units for 23 triplexes, duplexes. You can see how quickly I go through my numbers.
Exactly. You do need to understand about cap rates, the mechanics of how the banks and CMHC or lenders are going to look at your numbers. So that's part of the homework. Understand these concepts because you've got to manipulate them and sometimes fast. Like, my NOI is X divided by what I know are average cap rates in my market area. And I arrive at a valuation, an approximation of the value of an apartment building, right? Am I in the ballpark? It's not going to be an exact number. I often tell my students, the valuation approaches are called approaches, not the science of valuation. So they're very imperfect. There's a lot of subjectivity. So, but you still need to be able to arrive at an approximate value for your apartment building. You need to know how that's being done. So I would think it's important to do that. Just doing your homework, working with specialists, Mark. It's not like you can work with just anybody. Your realtor should be a specialist in multifamily properties. Your mortgage broker, your building inspector, your lender, and I think I said mortgage broker. So work with multifamily specialists. I don't want to scare anybody, but the reality is that if you screw up when you start, wanting to invest in multifamilies and you screw up, you might be blacklisted more easily than you would with smaller rental properties where you'll always find another realtor to work with you, another banker, et cetera, mortgage broker. In our world that you and I work in, multifamily of 5 or more units, it's a finite world. You got to tread carefully. You got to act like a pro. You got to do your homework.
It is a very small community when we all do know each other. It's so funny. I was working with somebody and like, oh, this thing. And I'm like, oh, yeah. I've been in that building. I know that. Like, you want me to just call them? Like, we're all, doing the same thing. So, yeah, we're all hanging out. Like, it's not.
And wait till now you're in Edmonton. It's even more incestuous. Everybody literally knows each other. So again, you got to behave like a pro, and just so that means you got to do your homework.
Well, just an example. We're selling a 5-unit in Toronto. We had an inexperienced agent on the other end, and I was trying to coach him. It's like, okay, well, it's the best thing for my client to have this deal go through. So I'm trying to coach him, and he's like, they're like, oh, we need an environmental. I'm like, okay, that's 6 weeks right now. Like, you order it today, it'll come in 2 weeks. Show me that you've ordered it. And like, listen, I have, I don't know how many contacts for this. I can get you set up, no problem. And they didn't want my help. And I'm just like, oh, this deal. I said to the client, I said, 2 weeks, this deal is dead because they won't listen.
Isn't it a pain in the butt? I sold the only building I sold, and I kind of regret having bought it because guys like me even make mistakes. Everybody can make some mistakes. It wasn't a cost a mistake, didn't lose money, but we had like that, an agent, a realtor on the behalf of the buyer that didn't know what they were doing, and it was painful, and we had delays and delays. But your timing, right? As you know, Mark, because you came to my workshop, I got this chart where the offer to purchase flow charts and various steps that you need and reports you need to order. And these timelines vary from one jurisdiction to another. So your job, part of your homework is to know these timelines. How long is it going to take me to get an inspector out there? How long is it going to take me to get my environmental site assessment phase 1? You always got to get a phase 1, whether you go CMHC insured financing or conventional financing, which is non-CMHC and all of that.
Union.
Credit union, say that again. Are they good, fast?
Yeah, you don't need an environmental if you use a credit union.
That shocks the heck out of me. I would never buy a building without getting an ESA. Personally.
Because I want to refinance to a big 5 bank, never CMHC.
Exactly. But that's interesting. Credit unions don't need an ESA. Wow. Okay. That's not cautious. That's not prudent. But that's just my opinion. A former underwriter, but that's kind of it. I think it's just people need to understand it's a little bit more work upfront owning an apartment building or getting one, but
higher costs too, right? Like you're going to be out more money than if you're just buying a residential property. So
exactly, and you know what, Mark? If you were to ask me, the biggest problem for people not getting or not getting into multifamily properties is I think their mindset. Namely, if you want to make money, you got to spend money. If you're not prepared to do that, like, my course, we're going to talk about my course. I charge $2,500 for my course, but you get a ton of value. And it's the best one in Canada. There's a few copycats.
You're not biased, though.
No, well, I mean, I use this stuff, right? It's
I know
it's
you
like,
do.
and my reputation precedes me because it's a combination. But the point is, some people are reluctant to spend money. Gosh, don't consider it then, because it is part of making money. You got to spend money on your education, on an ESA, on a good inspector, on a good mortgage broker. So you got to spend money if you want to make money. You gotta, so changing your mindset, I find some people have a hard time with that because it's not the stuff. Yes, you got to do your homework, but it's not difficult. The math is not difficult. It's overcoming that. You got to deal with larger numbers, and you got to do your homework, crunch the numbers, go to the source of the data, the income and expenses that the vendor supplies you, and crunch the numbers. You got to do your homework.
If you guys are looking to get into multifamily investing, there's probably no better course out there than Pierre-Paul. He does go nuts to bolts, everything in between about how to do it. But yeah, let's switch gears a little bit and let's talk about how have you guys been faring through COVID, and what's your opinion on multifamily through COVID and everything like that?
Yeah, this was the recession we're in. Is my second one as a multifamily owner. The last one, 2008, 2009, I was actually still an underwriter at CMC, and I owned one property at that time because I knew I was on my way out to focus full time on multifamily investing. So two recessions later, uh, you know what? Apartment buildings are a low risk asset, especially in difficult times like this pandemic or the 2008, 2009 recession. But let's focus on the pandemic. Tenants continue to pay rent. They hardly defaulted on their rent at a rate of national average of 96%. Values did not crash. Many markets, rents, we haven't been able to increase our rents, but values did not crash. So in other words, tenants kept paying their rent, values didn't crash, so we kept making money, paying down our mortgages, and of course, if like me, and I know you've been buying, we've either refinanced or got renewals at extremely low cost of money, so you get a nice spread. Cost of money, as you mentioned earlier, is lower than your cap rate, your yield rate. So how can you complain about that? It's cheaper to buy money to make money. That's what we mean about the spread. So they've continued to fare very well. It's a resilient asset class. Historically, has known to be like that. I think I was reading in Forbes magazine that it's one of the best asset classes that you can get in during a recession. So they've done well.
I mean, you think about it, that's the banks, why they give us such cheap money is because they view this as the least risky real estate asset that anybody can hold. So
second to principal residences.
Second to principal residence.
Because people will do anything not to default on their personal home, right? And up after that, or down the list of second lowest risk asset is apartment buildings. And somebody saying this is the banks that tell me this.
Because they, if you don't pay, they know that the tenants will keep paying, and
just your vacancy risk alone, Mark, right? In a 24-unit building, if I have one vacant unit, that means my property is still at 96% occupied. So I'm still cash flowing. I'm still paying the mortgage down and all that, paying all my operating expenses. So your vacancy risk is more diluted. And you know what, Mark? Let's look at the future trend. So we all know that we have a housing crisis on our hands. And by the way, don't count on any of the freaking politicians who just got elected a couple of days ago to solve that problem.
Or the ones that didn't, they weren't going to solve it either. So let's be honest.
You and I agree, because the biggest problem, and I don't want to get into that soft topic, but let me plug that in. It's the cities, the municipalities are the freaking problem, not giving building permits and allowing for higher density and all the red tape and bureaucracy. So anyways, that's so the federal government won't resolve those problems. But the point is,
I would still buy in Ontario, even though like the cap rates are so minuscule and whatever. Yeah. I'd still buy here because I know that in 10 years there's going to be a worse housing shortage than there is now.
And that's my point, Mark. We are increasingly moving towards societies of renters. I come from Quebec. This sexy accent of mine is not fake, and it's a society of renters. Like, go to Quebec, Montreal, July 1st. You'll see trucks all over the streets of Montreal, right? But you go to Europe, anywhere else in the world, they live in apartments, right? Yep. And in Canada, for some reason, took homeownership for granted. That's going away. That is becoming out of reach for most young people and generations. So might as well be a landlord. Is my philosophy. And increasingly, I think, just again, to make the point that apartment buildings are a low risk asset, increasingly we're moving towards a society of renters. We already are there. And with the immigration, once the floodgates to immigration are open, it's going to be even more so the case. So that's my take, Mark. So to bottom line, apartment buildings have fared very, very well during the pandemic, like they did back in 2009, 2008, 2009 Great Recession. So it's a good asset class to be in. That's why I'm in it. That's why I don't want to sell you my buildings, Mark.
Whenever you're ready, just let me know. We'll do a nice.
Never. Yeah. I hope my kids will inherit my shares in those buildings. Yeah, absolutely.
Pierre-Paul, thanks so much. But so when is your course coming up?
I've got a course workshop, the Canadian Multifamily Investing Blueprint, October 29th to the 31st, Halloween, a day. But before that, Mark, if people are not sure, the other thing I want to mention, apartment buildings, like multifamily investing, is not for tire kickers. Either you do it or you don't. So once you commit, you got to be committed. You cannot just be interested in, investing in apartment buildings. And again, I don't mean to scare people, but Mark, I teach experientially, right? With case studies. And so if people are not sure, is this for me or not? Here's what I have for them. They can start. I mean, today's podcast with you is not going to be, posted until next week, but they can still sign up. They go to multifamilyinvestingcanada.com, Mick, multifamilyinvestingcanada.com. You'll see a button to sign up for my master classes. The one tonight is about cap rates, but you'll get the replay. So even if you sign up later, the next one is, I think, October 6th on attracting capital for your multifamily deals. Guess what? Mark and I don't use our money when we buy apartment buildings. Most of my students don't. All right. So I'll teach you some of my how I'm successful at attracting capital, and then one on financing. So if you're not sure, you want to learn more about it, and I really get into real content with case studies because I teach experientially by learning by doing, right? So that's at multifamilyinvestingcanada.com. And then you can decide whether you want to come to the workshop, which is October 29th to the 31st of October. But sign up rather earlier than later, because then the way that it's set up is you also get the online course, which you can start working on before you show up to the live event. And then when you're at the live event, you get the content, you assimilate the content a lot better. And all of that is at multifamilyinvestingcanada.com. So on my website, Mick, multifamilyinvestingcanada.com. Very simple URL.
We'll put the link down below. So
fantastic.
Yeah. Just click the link down below and you guys can check that out.
Awesome. Mark, it was great to see you last summer in my own town of Cochrane.
Yes, and
I'm waiting for you to come back, and we can do some nice hikes.
We'll do some nice hikes for sure. All right, sir. Well, thank you so much for coming on and supporting the channel. I know that you do through your Facebook as well. And definitely appreciate it. And yeah, if you guys are anybody interested in buying apartment buildings and you want to learn more how to, then the master classes are a great idea. And obviously, if you can make the weekend happen, I highly recommend it. I've worked with a number of your students, and they're always well versed and have a great idea of what they're doing.
Fantastic, Mark. Well, thank you for having me on your show, my friend.